Roy, good to have you on the show.
Thank you very much.
Time flies. Just the other day, we're talking about, what the year holds, just 2018. Just give me a sense of the figures here, what I might have actually missed out. If you do ask anyone, revenue up 11%, operating profit 14%. Things are actually looking quite good.
We think it's a very good set of operating results. We certainly, like all other businesses, are faced with some challenges in the market, but generally speaking, our businesses have performed extremely well. Our schools business continues to grow scale. We are investing. We've had some significant investments in Africa as well, which are looking very encouraging for us. Our tertiary division has put in another outstanding performance, 10% revenue growth and 23% operating profit growth. And our resourcing division, I think the management must be commended, because obviously you can understand what a difficult market that is in these economic times. And they've really posted an extremely good result with profit going up 22% there. So overall, we're very pleased. It's a positive set of trading results.
Right. Roy, one thing that actually sticks out for me from your results is trying to compare the headline earnings per share, the basic and the diluted. These are all up 7%. And this is a very rare sight, because often at times when you're out there on road shows, trying to raise capital, trying to raise equity, you're going to have lots of sweeteners. You're going to try to make the deal quite good. And the diluted usually does reflect this. But this is both up 7%. Just walk me through this figure for many of us out there who are trying to understand.
Well, it does demonstrate the growth that we're achieving and the fact that we are in a capital investment program, but nevertheless our very strong cash generation enables us to fund more and more growth. So our results at that level are positive off the operating base, and we think we've got a very good investment story.
Right, let's talk about Monash. Everyone was actually quite taken back when we got the news. Massive acquisition. What are your plans going forward? How much has it set you back? Payment plans? Just give us an outlook here.
There has been, I think, an error that was made recently today. Somebody on the wires picked up the wrong figure that was moved. The cost is it's significant. It's around about 350 Rand plus working, 350 million Rand plus working capital. But it does bring with us a very well-appointed campus on the West Rand, which has a capacity for some 6,000 students. There are nearly 4,000 students in that entity as we stand. And also, we gain access to a number of qualifications that add to our significant portfolio. So all round, it's a very good fit with ADvTECH. Its focus on the quality of its academic offering matches extremely well with ours. And we think it really solidifies and entrenches our position as the leader in the private tertiary space.
I'm again taken back by the exchange differences translating to our foreign operations. 2017, this hurt you quite bad. We're looking at what, 6.4? Fast forward to 2018, 52.6. You're actually in the green here. You're one of the people who are benefiting from the Rand being where it is,
Yes, I think, this does happen. And what we rather look at is the underlying quality of the assets that are generating the returns, because there are always going to be volatility and fluctuations in exchange rates. But generally speaking, in Africa, the markets are dollar denominated, and it should be positive for us looking forward. But again, volatility in currency markets is something that is going to be a feature when you start to move internationally. And what's important to us is the quality of the assets that are generating the returns.
Right. Let's talk about some of the liabilities. Of course, there's a lot that you have taken on in the past 12 months. As an investor, when do I start to get worried?
I wouldn't be worried. I think if you look at the business and its very strong cash generating capabilities, that enables us to fund the investment program. So whilst the absolute level of debt has been, or in Rand denominated terms, the level of debt has been growing, our ability to fund that debt is significant and continues to grow with the growth that we're experiencing in the market. So we still have very comfortable headroom in terms of our own covenants and policies and guidelines that we've set ourselves, and an exciting investment pipeline. So I think the important feature is that to look at the cash generated, to look how the cash generated from operations grows, and our ability to fund that level of debt in the investment pipeline is still very comfortable.
A few weeks ago, we were quite taken back by some, what do they call them, Ivy League schools in the U.S. that there were actually revelations of some of the Hollywood stars who had gotten their certificates and they just didn't exist, if I could just put it bluntly. Do you see such an issue coming up in some of our tertiary schools here in South Africa? And if so, what is What are the likes of ADvTECH actually doing to counter this?
Look, I think one needs to understand the events and circumstances, and those Ivy League schools and high-profile institutions were not at fault. It was actually people who were trying to bypass the systems and the structures in process in order to gain access to those institutions. What it really tells us is that how consumers value high-quality education to the extent that people are attempting to fraud in order to gain access. So the institutions themselves weren't to blame, and of course their systems were robust and relatively secure. It was individuals colluding to try and gain access that was the real issue. So I think what it does do is it does point to the importance of the integrity of systems within an institution to make sure that any attempt to defraud in terms of whether it's qualification fraud, whether it's access fraud, is picked up early and dealt with thoroughly.
If we're to go back to the numbers, operating profit before interest and non-trading items, for South Africa, you're up 5% for this year. Rest of Africa, you're down 89%.
Yeah.
This is a worrying figure, Roy.
No, not really. I think if you look at it and see what's happened, obviously during this period we've had a significant upfront investment in the expansion of Crawford schools in Nairobi, which has been very positively received. We exceeded our enrollment targets, and I can tell you that the level of interest at the Crawford International School in Nairobi has been phenomenal. So we're very excited about the response that the market has given to us. In addition, we have the Makini schools, which we acquired, and that's looking very positive as well. So the adjustment in profit is as a result of that upfront investment, and we did actually build all of the phases of the Crawford School in order to establish the brand in a new market, which we thought was important. So it's comfortable. If you look at the important point is how the revenue has grown 131%. And in fact, if you look at schools do normally go through a J-curve, it's a perfectly normal pattern.
I love that you bring in the J-curve. But Roy, thanks for making time to speak to us. Finally, though, how's your Swahili?
Getting better all the time.
That's what I decided. That was ADvTECH CEO Roy Douglas.